Today's assignment talks about insurance, the different types of insurance, why we have insurance, and why some people need it and perhaps some people don't. First of all, why do we have insurance? We have insurance to protect ourselves, the ones we love, and the things that are important to us, our homes and our cars. And incidentally, auto insurance is going to be mandatory very soon here in the state of Wisconsin. How did insurance come about? What's its basic purpose? Well, essentially it spreads risk around. All of us live in a risky world. Things can happen to us. And insurance protects us in the event those things should happen. Let's take a very simple example. Let's say there's a very small town, call it Townville, and in Townville there's only 10 homes. Each of those homes is worth $10,000. Now, if something were to happen to a house and it needed to be rebuilt, let's assume that that would cost $10,000. Well, the people in Townville don't all have $10,000 saved up to replace their home should something happen to it, but they do pay an annual insurance premium of $1,000. The 10 homes pay an insurance premium each of $1,000. So, if and when a home burns down in Townville, there's a pool of money, exactly $10,000, to replace the home that burned down. Let's talk for a brief minute about life insurance. Do you need life insurance? Well, basically life insurance protects you and the people you love in the event that you die. Your life has worth. It has worth based on the job you may have and how much money you earn, and the people that you may support are counting on that income. Life insurance can replace that income in the event of your untimely passing. How much is life insurance? Well, it depends. If you're a young person and in relatively good health, life insurance can be very affordable. If you're an older person or a person in not so good health, then life insurance can be expensive. You also need to know that there are basically two types of life insurance. There's term insurance and whole life insurance, and there's many variations on both. But basically, term insurance is insurance that you buy for a specified amount of time. It's like gambling. You pay for the premium for a short amount of time, 10, 15, 20 years, and in the event you die during that time, then your beneficiary collects the face amount of that policy if you should die. When that term is over, so is your insurance coverage. It's a contract between you and an insurance company to protect you in the event of your death. Whole life insurance, on the other hand, is insurance that you pay for, premiums that you pay for over time, your whole life, though you can get whole life policies where you only pay premiums for part of your life. And that policy has a cash value as you maintain it. Cash value, the benefits of a cash value, you can borrow against it. You can cash out the policy if you choose. And of course you always have, just like with term insurance, a death benefit in the event you die. Now many financial planners are critical of whole life insurance. They claim that because the premiums are much higher than they are for term insurance, you could probably take the difference between the two and invest them in a different way to earn more money than you would on a whole life insurance policy. And if you want to investigate that, feel free to do so. It's quite interesting. Let's just make sure we understand a few life insurance terms. The beneficiary is the person who collects the face amount of the policy when the insured person dies. Your beneficiary could be anyone you as the policyholder name. It could be more than one person. It can change over the course of that policy. You just need to do that process, document that with your insurance agent sometime. The premium is the amount of money you pay on a monthly, quarterly, semi-annual, or annual basis to keep that policy in effect. What affects the premium in a life insurance policy? Several things. How much coverage you want. Are you insuring your life for $10,000, which might just cover your funeral and burial costs? Or are you insuring it for several $1,000,000 to replace your income in the event you die? The amount of coverage will be a great determinant in the amount of the premium you pay. The other thing that will determine the amount of your premium is your age. Younger people pay lower premiums because they're less likely to die than older people. Your gender will affect your premium because we know there are slightly different life expectancy rates for males and females. Whether or not you are a smoker is a huge determinant in the amount of premium you will pay. Your health. If you're in good health, your premium will be less. If you're in poor health, it will be more. And most insurance policies will ask for some sort of documentation as to your health. They may ask for a blood sample. They may send an agent to your house to collect a blood sample or ask for some sort of medical records to verify your health status. Oftentimes people wonder whether they should have life insurance and how much they should purchase. I'll tell you personally that I prefer term insurance, and that I try and carry enough term insurance that would provide for my family in the event of my passing, that would take care of the mortgage on our home, would pay that off, would provide for a college education for my children, and there would be some money there left for my wife or my widow to carry on in my absence. You may be thinking that's needless or somewhat silly, but consider. Let's say that you're a 25-year-old individual, and that, like most people, you plan to work for 40 years. Let's say that the average salary over the course of that career will be $50,000. You'll make considerably less maybe when you begin working. You may make considerably more with raises and adjusts for inflation by the time you retire. So let's say the average is $50,000. Well, 40 years at $50,000 means that you would make over the course of that career $2 million. Your working life is worth $2 million. And the people, your family, wife, spouse, husband, whatever, and family would be counting on you to have that kind of income. Yes, they may receive Social Security benefits and the like after your passing away, but your life still has incredible value, and you should think about insurance as part of a package when you're in a position to begin financial planning. I would again caution you greatly as to choosing between term and other types of insurance policies. There are whole life policies that can cost you hundreds and hundreds of dollars to maintain per month. And the selling point is they will tell you, well, they carry a cash value. Again, I would urge you to think about, well, what if I took the difference in dollars between a term life insurance policy and a whole life policy and invested them in some other way? Could I make more interest? Most financial planners would suggest that yes, you could. But that doesn't mean that you don't need life insurance, because life insurance should be part of any family financial planning. You may be wondering if you can insure someone else's life and not just your own. And you can. Spouses can insure each other. Things can be set up many, many ways, and I would encourage you to talk to an insurance professional about that. Let's talk for just a brief moment about auto insurance. Auto insurance, as I said, is something we all have to have, and in all honesty, is something that you want. You insure your car so that if something should happen, you can have it fixed and returned to the value that it should be. You may owe a considerable amount of money on a car you've purchased, and God forbid you get in an accident and don't have insurance. You would have to pay out of pocket to get that car repaired and back to the value that it should be, the value for which you're still paying for. Okay? Now, there are different types of auto insurance. There's collision insurance. Collision insurance protects you and your car, will get your car repaired in the event you were in an accident. More importantly, there's liability insurance. Liability insurance protects you in the event you're in an accident with someone else and you are found at fault and you cause damage to that other person's car or that other person themselves. Liability insurance will bring with it some medical coverage that will cover that person's bills in the event they're hurt. And we know how expensive health care can be. In addition to collision and liability coverage, you can get things on your auto insurance policy that cover many other situations. One great idea is to have uninsured or underinsured motorist protection. And basically what that means is that if you're in an accident and it's someone else's fault, but that person doesn't carry auto insurance, your insurance company will kick in and protect you and pay for any costs associated with that accident, whether to your car or your person. Let's talk for a brief minute about the factors that will influence your auto insurance premium. First of all will be the limits on coverage that you want. You can insure your vehicle, you could insure it for twice its value. I don't think you want to. But the type of car that you drive will definitely affect how much you pay for an insurance. If it's an expensive car that's expensive to repair, your premium will be higher. Other things that will affect your premium have to do with your deductible. And what is a deductible? A deductible is the amount of money you pay out of pocket before your insurance kicks in. I typically carry $500 or $1,000 deductibles, and they bring my premiums down quite a bit. Why do I want to pay something at all? Well, I don't. But sometimes it's easier, it's more advantageous for a cheaper premium to say, I'm willing to pay the first $500. I'm willing to pay the first $1,000 before I can even make a claim. The other issue that comes into play and can affect your premium is your driving history and whether or not you've had claims before. One of the reasons I would rather pay a $500 deductible than call my insurance company every time I get in a fender bender is I don't want that record of accidents to get so long that my premiums start to rise, or perhaps I'm denied coverage, which does happen to some people. Your auto insurance premium is, of course, affected by both your gender, male or female, and your age. Typically, younger males will pay the highest premium. Why? Well, at least it used to be that when a young man and a woman went out on a date, who would typically drive? The young man. Who typically gets more auto citations, traffic citations? Middle-aged men or younger men who just got their license and like to see how fast their cars can go? You get the idea. Insurance companies are very good about determining who is riskier than others, what groups of people are riskier than others. In regards to home insurance, if you own your own home, or even if you rent, you should have insurance to protect your dwelling and the things that you own within it. Home insurance is required by most lenders when you go to get a mortgage. They will ask you to bring proof of a homeowner's policy. Sometimes you can get great deals by having your home insurance coverage provided by the people who also provide your auto coverage, and maybe even a life insurance policy. If you bundle those things together, sometimes you can get a discount. And there are many ways to get discounts on all types of insurance. You need to do some investigation at websites or call insurance brokers and ask them for discounts that you may qualify for. But you want to have homeowners insurance. Homeowners insurance will protect your home in the event there's a fire, perhaps if there's a flood. Make sure that you have flood insurance. Many people in recent floods have found out that their homeowners policy did not protect them in the event of floods. It will protect in the event that perhaps your house is broken into and TVs and expensive items are stolen. It's best to document those items through photographic means, at least by having some list on hand where you document your jewelry and specific items within your home. And again, even if you rent, you should look into renter's insurance. That again will protect the things within your home in the event of some catastrophe that's beyond your control. In terms of health insurance, a topic which has garnered incredible amounts of attention in the political world and in our society in general. Ideally, you will work for an employer someday that will provide you with health insurance. There will probably be a co-pay or amount of money you have to pay on a monthly basis or when you visit your doctor or your dentist, but the majority of that coverage will be paid for through a group policy that your employer carries for you. In the event you need to get health insurance on your own, it can be incredibly expensive, almost unaffordable for the vast majority of Americans. Therefore, there are some government-sponsored programs currently that people access when they are in need of health care. You may wonder how insurance companies determine premiums or do the work that they do. Because they have a profit incentive, they are very good at determining what insurance should cost. It's an actual science. It's called actuarial science. And they statistically determine what are the likelihoods that a 25-year-old non-smoking female will die. What are the likelihoods that a senior citizen driver might get in an accident? What are the likelihoods that a house made of wood will burn to the ground faster than a house made of brick? You understand what I'm saying. They have entire departments, scores of people who determine what are the risks for certain life events, and they take those risks into account when they determine your premiums. Your premiums that are collected, they take and invest and make money on them, hoping that they don't have to pay out too much in claims. Sometimes they do, and sometimes they don't. Insurance, just like in banking, offers many, many options, and policies should be thought of as products. Products that insurance companies are trying to sell. And they will tailor a product for you. If you want to, there are famous actresses and actors who insure parts of their body. Dancers who've insured their legs because they were so important to their careers. The point is, you can find any kind of insurance policy that you might be thinking about or that would meet your needs. Like everything else we talk about in this course, it's up to you to be a wise shopper and investor. And I will caution you, please be honest with any insurance company for any type of coverage. Because if they find that you've been dishonest when you applied for coverage, if you misled them in any way, they will take your claim to court. And they may in fact win and not have to pay money that you thought you were going to get. This has just been an introduction to our assignment on insurance, and the rest of the assignment will have you look deeper into many of these issues. Of course, time won't allow us to analyze every type of insurance in depth. That's why I urge you, as I do in all financial and consumer matters, to do your homework. Look around. Don't be afraid to ask people who are older and have more experience. Certainly don't be afraid to look out on the internet. Though when investigating insurance, I would caution you that many of the sites that you'll run into are owned and operated by insurance companies, and they want to sell you insurance, and they'd love to sell you the most expensive insurance they can. So do your homework and get the best deals you can.